Hi there, welcome to Kneppy Invest and welcome to February 14, 2025, also known as Valentine's Day for some. And since it is Friday, I expect restaurants throughout the world to be inundated with those who want to celebrate their love for each other. I don't celebrate this day, so let's move on. Now, the market has closed not only for the day, but also the week. It closed about 18 minutes ago, so a little bit late today, later than I usually am. Now, no stock of the day. Now, there were three companies in the running: Cochlear, AMP, and Civmec. Couldn't decide between the three. Probably Cochlear would have been in the front there, but I decided to do a video on knowing when to sell because I did take profits into my trades yesterday and today in two of the companies that released the results today. Civmec, I sold out yesterday. I was listening to the market. The market was speaking to me, and I wanted to get out before they released their results because the company actually hinted the results might not be that good, and they sort of confirmed that today. And then I sold out of AMP. The chart looked really good. Market didn't like the results today. Easy sell for me. And Cochlear, share price has fallen a fair bit. Results looked really weak, but I would consider Cochlear to be a high quality company. So if the share price falls even more, way more maybe, because the valuation of Cochlear is quite rich, then I might consider buying some Cochlear shares for the long term. The other two companies in the top five, we have seen a positive reaction, particularly Avita Medical, and there is a really good, interesting reason why Avita Medical share price is up. And the other one is GQG, another company just missed being in the top five. That is LGI, company I do own. Share price was down 7% at one point today, but a nice reaction from the market during the second half, and the share price is actually up at close. Okay, what else am I going to talk about in today's video? I did get a message from my mother. They're in Chile. Yes, in Chile. I think they're going up the west coast of South America. She was talking about glaciers. Didn't realize it was glaciers in Chile. There you go. Actually, no. So Chile, I can actually just see the map. Chile, and then over the border we have Argentina, and along the mountain range of the Andes, I could see Andes. But I was thinking glaciers on boats. Anyway, I don't know that part of the world all too well. Maybe they're taking helicopters to see the glaciers in the Andes. Who knows? Anyway, I might look at the earnings calendar, and that's just before we go through the ASX today and do the usual things. I'll go through the top five stocks of the day, and then we'll have a look at some of your comments. Okay. Now, before we have a look at the earnings calendar, I got an email today from Superhero that I've been issued with 1,281 units of Paradigm Biopharmaceuticals options. And I was like, why? Usually you get options if you buy them or if you participate in a capital raising. I didn't do that with Paradigm. I was like, why am I getting some options with Paradigm? I'm not complaining because this would be my second ever options that I have owned. And the first time I had options, Findy, I actually exercised those options at 90 cents. And then I sold those shares at like $5. So I'm not going to complain if that happens again with Paradigm. So I was confused about this. Then I went to their website, to their announcement lists. And I just mentioned on the 31st of January, loyalty and piggyback options program. It's a 36-page document. I'm going to have to read that. Really read that because I'm just trading Paradigm right now. I'm not owning it for the long term. And it'd be pretty bad if they gave me options because I'm loyal, because I'm definitely not loyal to Paradigm at all. I've only held this trading position for like 2 months, if that. Anyway, so I now own options. And so that's our Paradigm Biopharmaceuticals options. Interesting. Now onto the earnings calendar. So I think I forgot to go through this yesterday. Cochlear, really interesting. According to TradingView, their earnings beat expectations. Not sure about that. We also saw Mirvac, GQG, AMP, Westgold Resources, Charter Hall Retail, REIT, Centura Industrial REIT, Abacus Storage, King REIT, LGI released results today. What's missing here? Civmec. Civmec's not on this list, I've just realized. So it's not absolutely complete. By the way, tomorrow, it's Saturday, so there's nothing being released tomorrow. Anyway, next week, oh, look, I didn't realize they had a week option here. That's awesome. And next week, we don't have day per day list here just yet, but we have BHP, Wesfarmers, Goodman Group, Fortescue, Telstra, Transurban, QBE, Bramble, Santos, and so on, so on. So next week's going to be quite busy in regards to results. And one thing I did realize, I don't know, this should have been something I realized much earlier. Our market, the ASX, is besotted, maybe that's not the right word, is besotted with REITs. Every single day this month, we have seen REIT after REIT after REIT release their results. I have no interest in REITs. I have no interest in putting my money into property, except the home I live in. But I suppose it's a good way to get some exposure to property. But I just don't understand. For me personally, it's just the no-go zone, REITs. And I sort of can understand it because the Australians tend to be obsessed with property for some reason. You just live in it. I don't think it should be. I have some views on property that I won't state right here. But because Australians are obsessed with properties, our market seems to be full of REITs. And I did read something many years ago that we have the highest amount of REITs per financial instrument on our market, which does make sense. Anyway, so that is something that really came to my mind today when I just saw quite a few REITs release their results. Now onto the market today. Pretty good day to end the week, I suppose. Although XGR only up 0.19% when it was up about 0.7% at one point today. Pretty good day for tech and small caps. Yeah, so yeah, we can see the XEO and XEO was or did drift lower during the day. Not sure what caused that. Didn't see anything interesting in trading economics. Asian stocks mostly rise. Dollar languishes. It's good news. Dollar set sharp weekly decline. Oil steadies at Trump delays reciprocal tariffs. He tends to do that, doesn't he? He just delays tariffs. I think he's using tariffs or the threat of tariffs as a weapon. I'm not sure if I agree with that because it's really a bully tactic, but he's trying to get what he wants. So, do whatever you want. Anyway, so not sure why our market did fall during the day, but in saying that, we go back to what I was looking at. Where is it? Here it is. Tech didn't really fall during the day. It just went sideways. Anyway, so let's have a look at the sectors and indices. Staples had a really good day, up 1.91%. And I think this was a broad, what's the opposite of a sell-off? A broad buy-in among staple companies. Let's just confirm that. Let's list this by market cap. Yeah, broad buy-in among staples. No real big performer here. Treasury Wine's up 3.05%. So really good performance for staples today. Not sure what caused that. In fact, if you have a look at the staple companies, only one company down. That's Australian Agricultural Company, and SPC Global, but that's just all over the place. Okay, so pretty good day for staples, pretty good day for IT, discretionary, utilities and telecommunications. Pretty bad day for energy and a negative day for financials and healthcare. So maybe banks did fall a little bit today. And the ASX 20 is actually down. So that's probably hinting that the banks had a bad day. So let's have a look at fairly quick look at the ASX 20. I'm assuming banks had a negative day. Where is it? Here it is. 13 companies up, 7 down. So even though half the companies, more than half, 2/3 of the companies in the ASX 20 are up, this particular index is down. And if we have a look at the companies or list the companies by market, the 3 biggest companies in the ASX 20 are down. CBA, BHP, and NAB. Yes, NAB is now bigger than CSL. That's just insanity. And CSL did have a good day. Nice little bounce. I would prefer CSL to drop a little bit more. I'd love to buy some CSL shares at 240. So make sure that happens. Everyone, sell your CSL shares so I can buy some at 240, some more at 240. Anyway, so that's probably why ASX 20 is down, because CBA and NAB had a negative day. And we can see why banks had a negative day, because those two were down. Funny enough, Westpac and ANZ were both up. Go the weaker companies. I don't know. CBA is by far the best. ANZ, I would say, is the weakest. Westpac and NAB, I would probably rate those two companies the same. Banks the same? I don't know. Anyway, let's turn our attention to the top gainers today. Let's see if there's any big surprises in this list. And at the top, we have a company called Scorpion Minerals. I wonder if that's a homage to the band Scorpion, because we have a homage to Metallica and a few other companies. We have seen a homage to Star Trek. So I'm wondering if Scorpion is a homage to the band, or maybe it's just a homage to the creature, scorpions. Maybe the band is Scorpions. I can't remember. Anyway, share price up 80%, fairly small company, market cap is 11 million after the share price has risen. I did see this company in the announcement list, but I can't remember what it was. But there has been a positive reaction from the market. Looks like Scorpion Minerals to farm into Junga Flats. Okay, so whatever. So let's have a look at the chart for Scorpion, SCN. And yeah, no, I'm of two minds with this one. We have seen a little bit of selling today. Share price was as high as 3.4. Now it's 2.7. But the share price is at a long-term high. In fact, the last time the share price was this high was back in May last year. So that is definitely over a 6-month high. I don't know, more of a story stock, and not that interested in story stocks anymore. I used to be more interested in story stocks, but just not for me. I tend to be more gravitated towards non-story stocks. So if this is your thing and you do like this company and their story, the chart doesn't look that bad, to be honest. There you go. Forestania Resources, FRS, share price has been wild with this one. Market cap is 6.34 million. The reason I say wild is this has been popping up on radar the last few days because the share price has been going insane. So yeah, up 25%, 40%, 7%, and 73% in consecutive days. Share price has gone from 0.8 to 2.6 cents on no real news driver. Now, they did mention phase 2 drilling commencing, but to be honest with you, that's like a so what. They did do a placement, successfully completed, but nothing really noticeable here. Nothing really share price driving here. And if you have a look at the chart, this is definitely a no-goer for me. This is definitely a no-go for me. Share price has gone insane today. Day traders, maybe, I don't know, but not for me at all, because I can see the share price going high from here, and I can see the share price collapsing from here. I just don't know which way it's going to go. What else do we have in the top gainers by percentage change? Nothing much. Vitura up 20%. This one has been rallying after they announced an acquisition and strategic placement to some guy whose dad and himself built a company from scratch starting in 1984. Now it's a pretty big company. So he's invested some money. And this chart's starting to look a little bit more interesting. Now, this is not a story stock. This company has been profitable in the past. Don't think they're profitable now. Even a dividend-paying company. The lack of a moat and decreasing margins because the lack of moat has been the problem for this company. So maybe now is the time to think about buying some shares in Vitura Health because the chart is starting to look a little bit interesting. Share price has rallied from 7.5 to 11 cents in the last 4 trading days. So it's about, I think it needs a little bit of a breather right here. Anything else here? No. Let's have a look at the top gainers by market cap. Temple & Webster rallied a fair bit yesterday, up again today. I would say either some positive broker upgrades. Well, probably don't have to say positive. Some broker upgrades today, which would make sense. Or it's taking a little bit of time for the results to digest for some fund managers. They've looked at the results and they went, oh, it looks pretty good for me. I'm going to buy some shares. So pretty good 2 days for Temple & Webster. So that's a pretty good trade I have made. And Synlait Milk. I'm going to do a standalone video on Synlait Milk because share price up significantly since I took a trading position in that company. So I'll do I'm not sure what video I'll do on Synlait Milk, but definitely a really good I'm not sure what I'll do with that one. Yeah, but definitely maybe just a chart video. I'm not sure, but I am going to do a standalone video on Synlait Milk, just basing the video on the chart and the reason why I took a position in that company, a trading position, up another 8.6% today, and the chart looks spectacular. Now, the one little problem I do have with Synlait Milk's chart is because the share price has rallied significantly over the last week and a bit. I need to see the share price take a breather. Share price has been rallying on pretty good volume as well, but this is a turnaround story if there's a turnaround story. Maybe a classic example of a turnaround story, Synlait Milk. And what else do we have here? That's about it. Where's Avita Medical? There it is. Avita Medical up 11.23%. Totally explain that. That is in my top 5 stocks. I originally was going to come in number 5. I'm going to put that in number 4. Yes, instead of a GQG. And what else do we have here? Nothing. Go Pointera, go Pointera, go. Now on to the top losers. I expect Cochlear, AMP, and Civmec to be in this list. Oh, that's the wrong one. Top losers. And what a bunch of losing companies, particularly Pure Foods Tasmania. Share price down 28% on $195 of turnover. So someone just had to sell their shares and didn't care the share price would drop by 29%. I don't know why you would do that or anyone would do that. In fact, on ComSec, it's down 35%. Ooh, I can see why. They've been restated to a quotation today. And the first trade on Monday, share price could be up. What's that? 60%? What's it? 60? It's 6. If it's up 6 and share price is 50, that's 60%. I'm pretty sure that's 60%. Yeah, so lack of liquidity is a problem for Pure Foods Tasmania. And just based off the name, I have no interest in that company. Plus turnover, fairly low. Why am I lingering? I'm pretty sure Wellnext Life did a couple raising, share price up down 20%, so we can move on. AMP, Cochlear, we also have Civmec here. All companies down a fair bit on their release of the half-year results. So we can move on. I'll talk about those companies in a little bit more detail later in the video. Prophecy International released a trading update yesterday. Not much of a reaction there. Share price down a little bit today. Again, this is besetted with just low liquidity. This could be just someone just selling en masse. Yeah, and I think it went below 50 cents, so that could be the trigger here. So this could be just panic selling or stop loss selling. Stop loss selling. Definitely not a good move. 50 cents was a really important level for Prophecy. That's probably another reason why people are selling. I wouldn't be surprised if the share price bounces. And again, not a lot of volume coming through for Prophecy. Anyway, let's move on. By the way, the trading update was not that bad. It was okay, but not massively bad. Anyway, and the reason why I didn't talk about Prophecy yesterday was because it's not massively bad. Anyway, so top losers by market cap. See if there's any other interesting companies here. Not really. Nothing really to talk about. Calix down, but the share price rallied a lot yesterday. Okay, there was one company very close to making it into my top 5, and that was LGI. The reason this was close to getting into my top 5 because the share price was down 7% at one point. Released half-year results. I am a shareholder of this company. It's more of a longer-term holding, even though it's not a high-quality company. It's just that they have headwinds, or not headwinds, tailwinds behind the company. Released their results, nothing wrong with their results. Share price did dip on open. Share price recovered during the day. But one of the problems with LGI is just probably a lack of liquidity at times. Share price has been going sideways forever. I bought this company about a year ago at about $2. I think it was $2. So I'm up nicely with this particular position. And I don't mind share price going sideways here because I think this is more of a longer term story. And you can see on times there's a bit of a sell-off. We saw that in August and also middle of January. And then the share price usually recovers when there is a bit of a sell-off. So it looks like about 270 is a nice buy-in for LGI. And the results, nothing wrong. Some did drop. I think profit did drop, but I don't have any expectations when it comes to this company right now, but it's more of a long-term play. Okay, so let's move on to the top 5 stocks of the day, starting with GQG. What can I say about this one? Overall, I was positive about it. There were a few misses. Now, this company has been, I suppose, influenced. The share price and chart has been influenced by their relationship with Adani. Share price has pulled back a fair bit. That could have been a good by the market panicking sort of example, because we have seen a V-shaped recovery in the share price. We'll have a look at the chart in a second. If you just have a look at their overall numbers, the numbers look really good. We're talking about significant increases in everything, but we're talking about 50% increase. But it's not about the increase. It's about how these numbers compare to expectations. So I did write something down here. For instance, revenue was a slight miss. So even though revenue was up almost 47%, it was a miss. So you could say, well, maybe argue share price should be down. But distributable earnings was a 3% beat. Full-year dividend higher than expected, 2.7% higher. And closing funds under management a little bit lower than expected. So a few good aspects, a few slightly negative aspects. So I'm not completely surprised share price is only up 2.95%. And let's have a look at the chart for GQG Partners. Is this an opportunity? Because the share price has rallied a fair bit over the past month. And you can see that V-shaped recovery. Share price got as low as $1.75 in early January. Yep, 13th of January, and has rallied since then. So a pretty nice rally for GQG Partners. And you can just see the turmoil in the share price over the past few months because of their relationship with Adani. And the market just didn't like that. Anyway, so that's GQG. I always have difficulty pronouncing this name, GQG. I always want to say QG. Oh, I can't even say it. Anyway, on to company coming in number 4, Avita Medical. Maybe this company deserves to be higher on the list. However, the share price rise in Avita Medical a little bit lower than the share price dropping for the top 3, Cochlear, AMP, and Civmec. Initially, I looked at the results. Which one was it? It was this one, I think. Initially, I saw the numbers and I was like, nah. So I went straight to this profit loss. So revenue, nice increase in revenue. So you can't take away this company's increase in revenue, a 30% increase in revenue, if I remember correctly. So their revenue increase or revenue growth is not the problem. The problem of this company is they are a loss-making company. For instance, in the 3 months ended 31st of January 2024, they had a loss of 11.6 million. In the year ended, a loss of 61.8 million. So what has been happening, even though revenue has been increasing, their spending has been increasing as well. So the company hasn't seen any scale. And you can see that just with sales and marketing, up significantly from last year, general administration flat, and research and development flat, but they really have seen sales and marketing increase from the previous year. So spending has been increasing alongside revenue. Although, just looking at this, expenses have been, oh no, I was looking at the full year, that's right. So expenses increased $25 million from last year to this year, but total revenues only increased 14 million. So in fact, over the past year, expenses have increased a little bit greater rate than their revenue. So that's a little bit of a problem. But if you do compare the last 3 months, you could see, maybe even argue that maybe the company is seeing a little bit of scale. I don't really focus on that when I looked at this initially. Anyway, so I looked at these results and I was like, okay, maybe these results are a little bit better than expected. But the most important thing for Avita Medical is found on page 1, financial guidance. This is what got me excited, and I think what got the market excited. Okay, so revenue increasing or revenue growth is not a problem. In fact, they expect this to continue in 2025. In fact, they expect revenue to be greater than $100 million. So we're talking about revenue increasing from, $64 million to $100 million. That's pretty nice growth. Now, if they can keep a lid on expenses or their spending, then they could turn that growth in revenue into profit. And the reason I'm saying that is because that's what they're mentioning. That is what they've mentioned here, and that's why I think the market has become a little bit excited about their results today. It's not the results, or maybe the results beat expectations by a little bit, but it's this statement, this financial guidance statement. So really nice growth in revenue, 55 to 65% increase from 2024. But it's the second bullet point. Expect to generate free cash flow in the second half of 2025 and reach GAAP profitability during the 4th quarter. So there is potential that Avita Medical will hit that inflection point, the very important inflection point during 2025. Do I believe they can do it? I think they can. I think they can do it. I think it just depends on their enthusiasm. Do they really, really want it? Or are they more inclined to want to see revenue growth as much as possible? And if they want to see as much revenue growth as possible, that could come at the expense of profitability. So I think it all depends on what management are thinking. And I might have to go through this a little bit more finer detail. But I think that's why the share price has rallied, because of that last bullet point. Now onto the chart. Now, the one thing about Avita Medical, and one of the problems with companies like this, is you will see a lot of volatility. Come on, Avita Medical. No, that's not it. Acoustis Technologies. Here we go. Avita Medical. Pretty bad looking chart for the other company. A lot of volatility. Share price of this company dove significantly back in January. 8th of January. Was that on their quarterly? 8th of January? Must have been on the quarterly. 8th of January. Yeah. Avita updates expected fourth quarter. Financial year 24 revenue. Financial year 25 guidance. Oh, I didn't realize this. So this could be an upgrade. This could be an upgrade. So I'm thankful I just went back to see. So they do have financial year 25 guidance. No, it hasn't changed. In fact, they mentioned updating previous guidance. The company now expects to achieve cash flow break even. So it hasn't changed. They actually mentioned this when the share price dropped a lot. So this could just be proof the market can be really fickle. So I'm not sure what the market is doing that. For some reason, anyway, I had the voice thing on my laptop going off. I'm not sure, not my laptop, my what do you call it? iPad going off. Anyway, it must have triggered it. Anyway, so I thought the share price rallied because they expect to become profitable during 2025, but they expected it in January, and yet the share price dropped significantly. So who knows what the market is thinking when it comes to Avita Medical. But to be honest with you, just by looking at this chart, I'd have to see the share price get above 320. It did it back in November, but it didn't stay above 320 all too long. The chart looked really good back then, but because of that January 8th update, share price has collapsed. Okay, so not interested in Avita Medical's chart. Now, the company itself, I am interested in. I do like that growth in revenue. The market cap of this company is like 400 million, so it's not that too stretched compared to, say, some other companies in this space. What is that company that I can't believe I can't think of that company. Anyway, so company itself, I'm interested in. The chart, not so much. Now on to the negative ones. We'll start off with Civmec. Down 13%. Got to go back in time. I did this in the stand-alone video on the, when was it? It was the 14th of November. They released an announcement, Shiploader Project Award and Financial Year 25 Outlook. I thought that Financial Year 25 Outlook was quite bearish, but the market didn't really react. So I kept a close eye on Civmec, particularly that chart. And over the last few days, we did see the share price pull back a fair bit. And I was thinking, is the market telling us something about this company's financial results? I wasn't sure when Civmec was going to release their results. I don't think they gave us any sort of, they didn't give us any sort of a notification. And I think it was just luck that they released results the day after I sold out, but just because of the chart. I'm not sure. I thought I don't know. It wasn't in the, maybe I knew. I don't know. Anyway. So the company did release their results. Where is it? And the results were quite weak. Media release. And it's really interesting because I sold out yesterday and I saw the company did release the results and I was like, ooh, did I make a mistake? Anyway, so revenue flat, up 2.2%. EBITDA down 11.2%. Net profit down 16.9%. Net profit margins down. EBITDA margins down. Earnings per share down 17.5%. So a lot of negative stuff there. It's really interesting that James Fitzgerald, the chairman, said, we continue to deliver strong returns to shareholders, evidenced by the consistent interim dividend of 2.5 cents per share. So just focusing on the dividend. So looks like a fairly negative result. Funny enough, continued profitability and strong balance sheet. When you see strong balance sheet in the title of an announcement like this, it's not going to be good. And continued profitability. You want to see growth. Anyway, so this could be a one-off because they sort of did imply that in that November trading update that there is potential that this result is going to be weak, and then they'll see improving conditions during the rest of this year into next year. So there is potential that this could be a little bit of panic from the market, and the market has sold off prematurely. So I will put that out there, that this could be just a one-off, and then now the share price will rally because of expectations of the next or the full year results. So I'm just going to put that out there for you. Now, onto the chart for Civmec. And this is a chart. So I thought I did know, I'll be honest, I thought I did know the company was releasing results today, but I don't know. And I think I'm just being a little bit biased because I sold yesterday. And that's what I'm thinking. I thought I must have known they were releasing results. Anyway, the reason I sold yesterday was we started to see a bit of selling coming in and the share price took a bit of a tumble. So I just went, oh, I think the market is selling off before they release their results because of that November statement. So I was just listening to the market here and I sold at $1.24. I bought in $1.06 back in August of last year. So it's a nice, almost 20% return. So I'm going to take that with this sort of reaction from the market. Funny enough, the share price did close at $1.06, which is a nice little support level, which goes back a fair way. Yeah. So $1.06 is a nice support level. Funny enough, that's when I bought in back in August. So will I buy back in today or tomorrow? Not today, next week. No. Look at that volume, massive volume coming in. One of the reasons I was bullish on this position up until a few days ago was the increase in volume compared to what we saw at the start of 2024. Very low volume for the first 6 months of last year, and that volume did increase. So who knows what's going to happen moving forward for Civmec, but $1.06 could be a nice little risk-free buy trade for Civmec. Anyway, so Civmec coming in number 3. 2, we have AMP. Funny enough, I put 2 in there, but got to put the T code. AMP, share price down 14.86%. Trading this, sold out of this trade today on the back of the market reaction. I waited a little bit just to see if there wasn't going to be a rally in the share price. Sometimes there will, but there was no rally. In fact, the share price continued to drop. So I sold about an hour into trading today. Not near the low, but nowhere near the high. So sort of in between the low and the high of today. Because I'm trading this one, I did pay a little bit more attention to this. And when I saw the share price was going to open a little bit lower, I thought, is the market overreacting to this? Now, there was Capital Brief did mention, AMP plunges after drop in full-year profit, dividend cut. But if you look at the underlying profit, which is what we should be focusing on, it was actually a rise. So 15% rise in underlying net profit. So obviously, Capital Brief was looking at statutory profit, which was a drop. So there is a big difference. I do believe that underlying profit is the main thing to look at. So when I first looked at this, I thought, oh, profit's up, underlying profit's up. Things were looking good. Then I got to the AMP bank section, underlying profit for AMP back down 22.6%. And I was like, superannuation investments up a fair bit, profit up 26.4%, and New Zealand Wealth Management up 8.8%. So we wasn't really sure how the market was going to react to this one. Did I write any notes? Yes, I wrote some notes. It just mentions here that the underlying profit, up 15.1%, was a beat. But some of the other things were misses. Platforms, assets under management was a bit of a miss, I think. Or net interest margins for AMP Bank was a miss. And final dividend was a big miss. So 56% miss. So they were expecting a 2.3 cents dividend. It was only 1 cent. I'm wondering if that's why the share price did sell off, because of that dividend. But overall, I thought it was okay. And then I saw the market reaction. I went, okay, the market is reacting a little bit differently than I thought. So that's a sell for me. Now, the share price, as we go to have a look at the chart, the share price could rally the next few days. I just don't know. That's why I'm getting out. I just don't know how the market is going to react over the next few days. A fairly negative one-day candlestick. Beautiful chart before today. So sometime, and I've said this often, that if you see the share price in an uptrend, more than likely the company will release something positive. But it doesn't always happen like that. I'd say it's an 80% chance AMP would have released something positive. And on a day like this, sentiment can just shift wildly. Can shift from positive to negative like that. So I have no idea which way the share price is going to go from here. A lot of times when you do see the share price in an uptrend like this, and the share price drops, you might see the rally. You might see a rally in the share price during the day, intraday rally. Or sometimes the rally doesn't happen until a few days after. So I have no idea when it comes to AMP. It could go up or down from here. I just don't know. And that's why I sold. I just don't know which way the share price will go. Before today, I would have said share price more than likely will rise. So that's AMP coming in number 2. Cochlear coming in at number 1. This would have been the stock of the day. Share price down 13.7%. I would consider Cochlear to be a high quality company. However, expensive. Now, when I opened up their media release, the first thoughts that came to my mind were, that's not much. It's not a very big increase in these numbers for a company that has a really high valuation. So we're talking about 5% change or increase in revenue, 7% increase in underlying net profit, in constant currency, only 1% increase, statutory profit, almost identical, and earnings per share up 7% or 1% in constant currency. 8% increase in dividends. I thought, I'm not sure about these results, but I don't follow Cochlear all too closely. So I had to go online just to see how these results meet expectations or missed expectations, because I thought more than likely the market would have expecting a little bit better numbers than that. Anyway, so here are some of the stuff. So revenue was a miss, 2.5% miss. Underlying net profit was a 2.2% miss. Interim dividend, 1.3% miss. So not big misses. And underlying, their forward guidance also was a miss. So the financial year 25 underlying profit between 410 to 430 million. Versus 426.6 million consensus forecasts. So the consensus was in their range, but they're just thinking, whoever wrote this, saying, hey, 420 million is the middle point of their range, and that is a miss to consensus, like a 2.7 miss. So slightly weaker than expected forward guidance, and all their metrics were a little bit lower than expected as well. Hence, even though slight misses all around can lead to share price dropping a fair bit, 13.7%. So if the share price, or if the results beat expectations by a slight amount, the share price could have rallied 13.7%. So again, the most important thing when it comes to results is how they compare to expectations. And the other important thing is any sort of forward guidance, any sort of outlook or trading update the company releases. Anyway, so let's have a look at the chart for Cochlear. Okay, so the chart, this looked really good not that long ago. Share price was in a beautiful uptrend during 2023 into the start of 2024. And I was trading Cochlear at that point in time. Now, it did get to the point where I was thinking, it's a little bit too expensive, even though I do think this is a high quality company. And I tried to maintain a position in high quality companies. Don't mention JB Hi-Fi. Anyway, so then I sold out my trading position. It was looking really good at the start of January. I was thinking, this is starting to look good. Should I take another trade? And I was a little bit wary of the valuation because P ratio of Cochlear is quite high. So there's a lot of potential already priced into this company. So P ratio 56. So that sort of increase in revenue and profit just doesn't do it for a company with a P ratio of 56, sort of like CBA sort of growth. Anyway, so it was looking quite good just before the results, but the share price did pull back a little bit in leading up to these results. And then today, in fact, this is a really negative one-day candlestick. That's to see that red body just tells us, hey, share price opened at the high of the day and closed at the low of the day. That's really negative. So really enthusiastic selling during the day. And you can see that just by looking at the 1 minute chart. In fact, if you look at the 1 minute chart, just selling all through the day. Now, the selling did taper off during the end of the day, but that's typical. So no rally in the share price at all at any point today. So that's pretty negative. Anyway, that's Cochlear coming in at number 1, the top stock of the day. Would have done a standalone video on that, but I did that other video. Now let's have a look at some of your comments. I suppose I have a little bit of time. Now I might just upload. Oh, geez, I'm getting a lot of these. So a big thank you to Mr. Garrett. Is that Peter Garrett? I don't think it. 48 thumbs up. I've been getting a lot of these recently, and then I have to report it. I report it. Unwanted commercial content or spam, report, and then it gets moved. So many of these. Another one. Oh, God, 18 seconds ago. Report, unwanted. There we go. CJ Smythe, who wrote about Sydney milk yesterday, take a look at FCG NZX. The dairy industry is having a good run. Global dairy trades have been increasing in the last 12 months, hence the 10 kilograms. What's MS? Million. What's MS? Maybe we can learn something. Kilograms. MS. Milk. Maybe it's something to do with milk. Here we go. Milk solids. Kilogram of milk solids. We have learned something today. That's MS. Capital MS is milk solids. So $10 kilogram of milk solids payout to farmers. China is the main buyer, pushing these GTT auctions up, reported by Fonterra. Bright Dairy of China now owns 2/3 of Synlait Milk. So what was that company? FCG. Is that Fonterra? What is FCG? Oh, Fonterra. I'm pretty sure we have Fonterra on the ASX as well. That's 1 minute, so we don't have to look at 1 minute. A beautiful chart for Fonterra. I'm pretty sure we have Fonterra on the ASX. I'm certain we do. Yeah, Fonterra Shareholders Fund. Yeah, so this chart looks brilliant. There has been a pullback, and look at that volume, really nice volume, although the volume increase has been on the pullback. Anyway, so a really nice chart for Fonterra shareholders. So thank you for your wisdom and your insight, CJ Smythe. It's really appreciated by me and hopefully for viewers of this channel. KLI22, based on this chart, is this a good buy the dip for Pentanet, or do you see more downside? This is an interesting one because I'm trading Pentanet, although I would prefer this to be a longer term hold if the share price pulls back. We have seen a bit of selling today, maybe. Oh, this is an interesting one. Very low volume coming through. Today we did see maybe capitulation. Maybe. Share price got down to 3 points. Maybe not. I don't understand why people are selling this one. They are operating cash flow, free cash flow positive. And I think this could be the turnaround point. So I think what's happening now is those who have bought at higher prices are selling out. And we have to get through all those. Those shareholders have to be washed clean of the registry. And I think that's what's happening now. I'm not sure. This is a 50-50 with this one. I'm going to maintain a long-term position in Pentanet just because they have reached that point. More than likely going to be adding to my position. Now, it's interesting. The share price has got to when the share price did open on the 22nd of January. So opened at 3.9 cents. It's now at 3.9 cents. A lot of times I will consider that to be a buy price. We don't want to see the share price drop any more from here. So share price has been drifting lower on fairly weak volume. So we need to see some buyers coming in. Best way they can do that is if Pentanet releases a really good result, really good financial half-year result or report, that sort of thing. Anyway, so Pentanet has pulled back. Not sure with Pentanet just yet. So I'm 50-50. But even though I've said I'm trading it, I want it to be a longer-term position. Gareth Godfrey, hi Kneppy, love your work. Been following for you for years. I'm keen to get your thoughts on EZL. I'm pretty sure I did something on EZL not that long ago. Euros, is this Euros? Yeah, Euros Hartleys. I'm pretty sure I did something on Euros Hartleys not that long ago. Euros. But I'm not sure which video. Here we go. Answers and replies on the 8th of February 2025. Euros Hartley. It's in the title. So I will answer your question by linking that video to your comment. So hopefully I talked about Euros in that. Euros has been popping up lately on my radar. A few different platforms, podcasts. Yeah, podcasts. Someone mentioned in a podcast. And then I had a look at the chart and I went, ooh, this is looking interesting. So Euros Hart and chart. By the way, share price got down to 92 cents today and closed at 95 cents. So some buying coming in for Euros Hartleys. There we go. So Euros Hartleys. Thank you. Okay, well, thank you for that. Felix Senora Kneppy. What about quick mention of ARGT, Argentina ETF? It's been doing well since Milei. Oh, because my mother was in Argentina. Okay, I don't know anything. They're Spanish. Brazil's Portuguese. Let's have a look at I had no idea there was an Argentina ETF. I suppose. Ooh, chart does look good. This chart looks spectacular. This is a brilliant looking chart. I suppose if you really want exposure to Argentina, this is probably the way to go. I don't think I could buy any shares on the Argentinian exchange. I'm not even sure what companies are in this. There could be some companies listed on other exchanges in Argentina. Is this Argentinian companies that are listed on Argentina exchange, or this companies that have exposure to Argentina? I don't know. Anyway, so that's a brilliant looking chart for Argentina ETF. There's another one here from Blake Scott. After the Buffett comment, think a new channel for you, Kneppy Ingests. Love you, look, keep up the great work, mate. My memory is terrible. What comment did I say about Buffett? I completely forget. I do know I mentioned Las Vegas and I love Buffett's, but that's nothing. Oh, I thought you were talking about Warren Buffett. Ugh, then I remember I was talking about Las Vegas. I don't really gamble, so I've been to Las Vegas quite a few times and I love their buffets there. For some reason, I was thinking of talking about Warren Buffett, but then I just realized there was one T. Buffett has two T's. Warren Buffett has two T's. But anyway, thank you for that. That makes sense. Kneppy and Jess. Would I ever do a food channel? No, absolutely not. Anyway, I'm going to stop it there because I'm going for 45 minutes. Reese, by the way, Reese5979, could you have a look at Develop Global, DVP? I was thinking of doing a standalone video on the chart there. So wait out for that one. Anyway, that's all I've got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.